And good evening, good morning, and good afternoon, ladies and gentlemen. Welcome to another edition of Bulls versus Bears Weekly Forex Forecast. I'm your host, Dr. Gregory McLeod from the Elite Traders University and my market heat map. So good to be with you on this Saturday, July 21st, 2023. And we're going to get into the economic announcements and technicals that we're going to be looking at for the coming week, which I think is going to be very important, important to your trading, because knowing what is going on in the economic world, the fundamental analysis drives the technicals that we're also wanting to look at. So let's go ahead and get started. We're going to go ahead and pull up or share my screen with you, and that way you'll be able to see what's going on. And we'll share our screen. Share screen number. Well, I'm traveling right now. I'm actually in Dallas, Texas. And you say, well, Greg, don't you, I moved from Dallas, Texas. And so we are actually, we click to share. We'll share, maybe share sound, maybe two. All right, share, be cool. And yeah, so we're going to put it on the reading view. View and reading view. Okay. Awesome. Okay. Yeah, this is a presentation of Elite Traders University. Elite Traders University, go to www.elitetradersuniversity.com for all your education needs. We have a 3-step process for helping traders become professional traders in 90 days or less. So go ahead and head over to Elite Traders University. There's plenty of free information there. We have a free income boost blueprint ebook that can help you in your trading, as well as a free masterclass, which shows you exactly how we get 90% win rate for our traders and how we get them to pass prop accounts. So make sure you sign up for the free look behind the scenes there for our masterclass. And also we have other things too. If you are just ready to go with our training, we have a wonderful Forex Foundations Power Trading course on our website as well. So go ahead and check those things out, and let's go and get started. This is again the weekly Forex forecast: Bulls versus Bears. And we're going to go ahead before we get started. I want to direct your attention to the risk disclosure on your screen to make sure you understand all risks associated with foreign exchange trading. Okay. And we're going to, and then again, my name is Dr. Greg McLeod. For those of you who don't know who I am, I'm the founder and CEO of the Elite Traders University. I'm a 28-year trading veteran and trading mentor. I trade options, futures, stocks, and forex and crypto. I'm one of the foremost authorities in short-term day trading known as scalping. I spent 8 years as a currency analyst and trader coach at one of the largest forex retail brokers in the world, and I graduated from the University of California, Los Angeles, one of the top 20 public universities in the United States. And I spent 16 years in public education, as I possess a lifetime teaching credential from the state of California. I worked at prop trading desks and worked at Bank of America. I'm a published author and have articles on Yahoo Finance, Daily FX, and FX Street. And I've trained thousands of students in my Pip and Run forex scalping system. I've also developed the trend spotter indicator and a number of other systems. And my trainings are still being used by brokerages around the world to help train their students to become professional traders. Okay. With that said, let's go ahead and get started. Our agenda for today, we're going to be looking at the U.S. dollar index, the euro dollar, and the pound versus U.S. dollar, Aussie dollar, dollar yen, and dollar CAD. We're also going to look at gold, silver, oil, the S&P 500, and we're going to start with economic news and world news, because those are the big drivers that help move the currencies. And if you don't pay attention to economic news, or you don't try to look at the fundamentals, what you're doing yourself a disservice. You're basically trading with one hand tied behind your back and with one eye closed, because you're putting yourself at a disadvantage. Because guess what? The big boys in Wall Street, like myself, when I work for one of the world's largest forex broker dealers in the world, we spend the first day of the week going over the fundamentals and the technical levels, but the fundamentals first, because we know the fundamentals drive the technicals. Okay, so with that said, let's go ahead and get right into it. I'm going to use one of my most favorite tools I developed, and I use every single day, and our students at the Elite Traders University use this tool as well. It's called My Market Heat Map, and it's arrangement of currency pairs by percentage change. We call it the trader's best friend. Try to put myself somewhere else. Okay, and you can also get 50% off too. In fact, if you don't even have to buy it, you can go to the front of the website for free. You get access to one of 6 powerful heat maps. This is just the Forex majors. We have one just for Forex, for all Forex pairs. We have one for all the indices, like the S&P 500, NASDAQ, Russell 2000. Then we have another one just for commodities, gold, silver, oil, wheat, corn. We also have another one just for the crypto majors, like Litecoin, Bitcoin Cash, Bitcoin, and Ethereum. We also have another one that has all the instruments together. When the markets are open, they'll trend green in the uptrend. They'll flash red to go that those are going downtrend, and it saves me so much time because I don't have to look at 28 different currency pairs or 72 different instruments. I can see what's trending, what's uptrending, what's downtrending. If it's gray, it's neutral, and it lets me know to stay out. So buying green, selling red, gray, stay away. Okay. Now you can also go to the front and have access to that heat map for free, and you go to mymarketheatmap.com. But then go ahead and reload, and then the economic calendar for the week will come up. You can get access to the economic calendar for free as well. So a lot of free deals going on there to help you out. My goal is to help traders become trade like professionals and not like amateurs. So they can make money, so they can help their families, so they can prosper their economic financial situation, and not so be dependent on demand. Right? Okay. So here we go. We're going to look at what's going on for Monday, July 24th, and we're going to start looking at the euro data. Now, the euro data, and I call it fund with flags. And if you're a big fan of Big Bang Theory, like I am, with Sheldon and this girlfriend Amy, they have a little show on the side with a show within a show called Fun with Flags, and they give all kinds of little tidbits and inside knowledge about the different flags, right? And I call this segment of my show Fund with Flags, because by looking at the flags, we know what is being traded. Okay, it's a key that the hedge fund traders and big banks use this, because major news comes out, and it's like trading places. The crop report gets released at 8:30 or 4 a.m. Or 10 o'clock, and the market freezes. And when the news is released, we get this huge volatile move in the markets. It's like wind going out on a lake, blowing different boats, moving those sails, and the currencies are little sailboats. And the wind is the news that drives those sailboats, right? And if you're the news items only move certain currencies, right? Pound UK news will move the GBP pairs. It might not move the Australian pairs. Australian news will move the Australian dollar pairs, like Aussie yen, Aussie Swiss, but they won't necessarily move the Canadian dollar pairs. Okay, so by looking at these flags, we know what will be traded, something that we can look at. So we're looking at Monday, July 24th, and we're looking at our first. Now you look at high impact items. There are other items too. There's low impact or no impact, like a bank holiday, a low impact, a medium impact, and high. What I did is I just check off the high, and I save this as on the front. I go to filter, and I go ahead and adjust this, because we want economic announcements which are going to drive currencies, create volatility, and create interest. We want to trade where the interest is. That's where the party is, okay? If you go to the wrong party, guess what? You're going to have flat beer, crumbly chips, and the police are coming. There's a raid, right? So you want it to go to the right party. And so right now we're looking at on July 24th at 3:15 a.m. They tell you the time the party is going to be. But not only that, big hedge funds and large institutions are positioning themselves ahead of the announcement. Means they are accumulating or buying up a currency based on the flag before and after this announcement. So, for instance, EUR, the Eurozone, they call it the United States of Europe, is it's an arrangement of some over 20 countries put together, but the largest economies are Germany, France, and Italy. They make up over 80% of the of the GDP of the Eurozone, of the United States, or the United States of Europe. So we see a French flag, and this is an HCOB manufacturing PMI. This is a purchasing manager's index, and the previous number was 46. The forecast calls for 46. Don't worry so much about the previous and forecasted numbers. We just want to know that there's a flag and there's going to be interest in this, okay? So some people say, oh, I like trading the Australian dollar because it's my favorite currency and I always trade Australian dollar. Well, guess what? You're not going to get any action here because the party is not in the Australian dollar. This is not the Australian flag. This is the French flag. Fund with flags, okay? Look at the flag and we're going to trade the flag, okay? So if you're trading Australian dollar because it's your favorite currency pair and I only trade one currency pair at a time, well, then guess what? If you try trading during that period of time, you won't make any money, okay? So a lot of times the biggest obstacle to traders making any money is being in the wrong pair at the wrong time. So yes, you should focus on one pair at a time when you're just getting started, but don't expect to make any money on that pair if that flag is not showing up anywhere on the economic calendar, okay? The economic calendar is telling you it's going to be a Euro party, and so probably has some Euro movement earlier going into Friday, which leads into Monday. So we have HCOB manufacturing PMI, and we have some numbers coming out. And also Germany. Germany is the number one, the biggest economy in the Eurozone. They are a massive economy. And so they have manufacturing PMI flash as well. It's expected to rise from 40.6 to 41. Don't worry about the number. I know you guys are, the way we are brought up in the United States, we fear numbers and we fear math, okay? And so, and you see numbers like this and you go, oh God, this blah, 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 blah. I don't understand. I'm a simple guy, okay? I'm an English major by trade. I majored in English. I also got my PhD in the Christian leadership and business, but my bachelor's is in English and it has nothing to do with math, right? So I completely understand your aversion to, you see numbers and percentages. Oh my God, this is so confusing. This is so hard. But I remember Greg likes colors and shapes, okay? I should have been, I actually signed up to be an elementary school teacher because I'm into colors and shapes and simple math, simple stuff, right? Colors and shapes. So I got my wish. Look, I see a French flag. It has the EUR on it. It means Euro. I'm going to trade the Euro. Simple. Okay. I'm going to look for patterns, moving averages, whatever you use to get in the market. If you're not using the Pip and Run system, I strongly advise you to watch the 4 Pillars to 6 Figures video, the free masterclass that's on my website, Elite Traders University, and find out about how our system works. It's simple. If you can count to 5, and you know your ABCs up to the letter C, and you know simple shapes, you can make lots of money, okay? It's that simple. It's not order blocks and supply and demand and blah, 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 okay? It's count to 5, know your ABCs to the letter C, and know some simple shapes and 2 colors. And if you got that, it's everything you learned in kindergarten. Okay, it's not cheap, it's not free, but it's simple and it's consistent. So you decide. You can go complex and cheap, or you can go simple and maybe a little bit pricey. But I tell you what, you'll make more money than I can ever charge you. Okay, if I charge you $100,000, it'll still be not enough because you'll make more than that. If I charge you $15,000, it'll charge. If I charge you $10,000, you'll always make more than whatever I charge you. So it doesn't really matter. I don't need your money anyway. The reason why I charge you is so you'll have some skin in the game, because people who pay attention, and people who don't pay attention. So anyway, I digress. But shapes and colors, remember that. That's Dr. Greg. Okay, he's not going to talk over your head. Here's another. So we got 2 German news items coming out. Again, don't pay attention to numbers. Just know that we're going to trade the Euro on Monday, okay? I'm not telling you what to do. That's what I'm going to do. That's what my group of my students are going to do. And there are going to be a lot of opportunities to make money in the Euro. you follow me on Facebook, follow me on Twitter, follow me on Threads. I'm going to be posting up lots and lots of games on the euro. And if you're not enrolled, you're losing money because it's the money that you could have made that you did make because you didn't sign up. Anyway, I digress again. When you get my age, you digress a lot. Anyway, pound dollar, 4:30 a.m., July 24th. Be there or be square. We have S&P Global CIPS Composite PMI Flash. 52.8 is the previous number. It's supposed to drop to 52.4. And so guess what? That's the Union Jack. They have a cool flag. They got a cross in their flag, if you notice. A lot of European countries got a cross in their flag. And you know what the cross means? It means Jesus Christ, right? And we all know that Jesus is the reason, right? So see the red cross in there? There's a cross, and Switzerland has a cross in the flag. Look at and look, Sweden has a cross in the flag, right? So it's cool. They have a cross in the flag. So the cross is here. That's real simple. What am I going to trade, Greg? Oh, gee, well, look, there's GBP. Oh, GBP, JPY, GBP, USD, GBP, CHF, GBP, CAD. It's fun with flags with Dr. Greg, right? And so this is going to be in play from 4:30 a.m. It's going to be in play at the end of the day on Monday, going into, you're going to find the pound dollar, and it's going to be very much in play. This doesn't necessarily tell you the direction, but at least you're fishing in the right pond, right? And if you're fishing in the right pond, well, you can't help but catch a fish, right? At 9:45 a.m., we're going to have, see, look, the U.S. flag there, stars and stripes. You can see that USD. Now S&P Global Services PMI as well, and that's going to come out. It's supposed to rise from actually drop 54.4 to 54, and from 54.2 to 52.6. It's supposed to actually drop. This is the S&P Global Composite Flash PMI. So that's there's services. Services is dropping. Composite PMI is supposed to actually drop as well. Again, don't worry about the number. Now, the USD is a little bit different. You can go dollar Swiss. Dollar Swiss has been in a downtrend, but we might see some kind of counter trend move on Monday. So look for dollar Swiss. I actually would still look at the euro. Why? Because the euro is the anti-dollar. When the euro goes up, the dollar goes down. When the dollar goes up, the euro goes down. They're inversely correlated. Inversely correlated. Right? Get it? So we're not really concerned about the number. We just know that we want to be in the right, fishing in the right pond. And that way we can at least we can know where the party is and we can move accordingly, right? We can position ourselves accordingly. Now on Tuesday, July 25th, then guess what? It's our old friend. We got the German flag again. The German flag has black in it, right? Not that we the African countries have black in their flag, but Germans have a black in their flag, which is pretty cool. I don't know. Schwarze, so Schwarz, right? That's German for black, right? They got Arnold Schwarzenegger. I'm like, okay, now I won't touch that. Don't write me. I go, wait, Greg, where are you? I have no idea what I'm talking about. 88.4 versus 88. There's a slight drop. IFO business climate. 4 a.m. Euro is going to be in play. Look at that. It's going to be interesting. Then we're going to have at 10 a.m. We're not going to have it in the 8. We might have a minor 8 a.m. or 8:30 a.m. But the other news cycle in the U.S. is an 8:30 news cycle at 8:30, right? I mean, there's a 10 a.m. news cycle. Guess what's at 10 a.m. too, right? This is the 10 a.m. and this is the CB stands for Conference Board Consumer Confidence. Supposed to rise from 109.7 to 111.5. That's a huge jump in consumer confidence. I know I said don't look at the numbers, but when the numbers are that dramatically different, and these guys can be wrong. This is a forecast. And however, if the forecast is higher than the previous number, that could be extremely bullish, not for the euro. I mean, not for the dollar, but for the euro. Good U.S. news often benefits the euro. Okay, but we'll see. Okay, and then at 9:30 p.m. we're gonna have a bunch of look at this Aussie data up the yin yang. We have an inflation rate. We have the RBA weighted median. We have RBA trend median CPI. And this is an inflation rate. CPI is this consumer price index. But remember I told you that I means inflation. Inflation is the cost of goods. If the cost of goods goes up, well, then that usually means that the central bank wants to fight the rise of inflation by either hiking interest rates. But however, if inflation is dropping, then they might say, hey, we don't need to raise rates. And if we don't need to raise rates, the currency will not go up, right? So CPI, Consumer Price Index, is supposed to actually rise from 132.6 to 134. If that is true, and we might pay attention to the number on this one, well, then we could see the Aussie dollar rise. However, if it disappoints, comes in a lot lower than 134, comes in lower than 132, we could see the Australian dollar actually drop. Because if other traders are pricing in higher inflation, but then they're surprised, then they have to adjust how they're positioned in the market. If they're long Australian dollar expecting a rise in inflation, then they have to get out of their positions and flip the other way around, okay? So this RBA trend mean CPI year on year, that is expected to drop from 6.6 to 6%. Inflation rate quarter on quarter is supposed to drop actually from 1.4% to 1%. So there's a little bit of difference because it's, you're looking at 3 months versus the year, right? And CPI usually looks at the previous month. So it could be, for the summer, for 1 month, for the month of June, it might have been up, but maybe for the previous 3 months, then actually it's lower. If you look at all 3 months versus 1 month, okay? And that's like long-term trend versus short-term trend. The short-term trend can be down, the long-term trend can be up, right? So you can have this confusion in the market, and that's why when I teach people how to trade, I always tell them to use multiple time frame analysis to look at price, not just in one time frame, but in multiple time frames. That way they can get an entire picture of what is actually going on. A short-term and medium-term and long-term view gives you a full multi-dimensional picture of what is actually happening with price, okay? So, but if you're just looking on your phone, you're looking at one little few candles and think you got the market when you're just gambling, right? Because you're not seeing the forest for the trees. You're missing the whole big picture. So that's why you're going to see these numbers not match up. You're going to see, well, the year on year is 6.2 was 7 because we're looking at a bigger data set. We're looking at the previous 12 months. Over 12 months, it's actually going down, but maybe the short-term trend is up, probably because of higher fuel costs or energy costs. I mean, you think of maybe Russia not allowing Ukraine to ship out grain could cause some inflation in food. There are a number of little factors. Energy production, energy and food are usually pretty volatile, and that can have a real big impact on inflation. Okay, so again, the numbers we're not so much concerned about because you probably have heard me in previous videos call them fundamentals, not fundamentals, but fundamentals, right? So we just know that at this time, on this date, on Tuesday, Aussie dollar is going to be in sync. It's going to be moving. It's going to be volatile. Even going into Monday, people are going to be positioning themselves ahead of this big slate of Australian dollar news that's going to come out on Tuesday evening, right? So we can actually, that's how we get ahead and get our edge and get in 4 or 5 bars ahead of everything, because we're looking at the economic calendar. We're looking at our predictive function indicators. We're looking at these things to give us that edge because, people say, well, we got to react to price. Like if you react, you're a dinosaur. You're already extinct. You're just gone. You got to be nimble like a mammal. when mammals first came out, they were small, they were agile, they ate the dinosaur eggs, and guess what? There's no dinosaurs. You see the dinosaurs walking around, but you see the little furry critters running around now, thousands, millions of years after the dinosaurs are gone, right? So the key is you want to be nimble like those guys. And so let's go ahead at 2 p.m. on Wednesday. We have Fed interest rate decision, and they're widely expected to raise rates 25 basis points from 5.25% to 5.5%. I mean, 550 basis point rise since the lows that we had last year. Amazing. And the economy is doing as strong as it ever was. But this Fed rate decision might put a lot of people on hold. Some of these announcements may not do a whole lot. If this is the last hike, or if they don't hike, if they surprise with a smaller hike, maybe they don't hike at all. Maybe they skip. Or if they say in the minutes that come out later that this is their last hike, then we actually could see the dollar sink dramatically, right? Or if they say that there are going to be more hikes, we could actually see the dollar rise. We were at 99, now we're at 101 on the dollar. And seasonally, the dollar usually rises at this time from the end of July all the way through into like October, November. We usually see dollar strength. So that could be something to look at. We're going to look at the technicals. But you can see how all this kind of times and works together. When you know about the economics and the fundamentals, then you can kind of look at where the technicals are going to go, right? We have the Fed press conference. So the euro is going to be extremely volatile. All the currencies are going to be jumping around at 2 p.m. And you might not see anything move before this, because a lot of traders don't want to be on the wrong side of the trade when the Fed raises interest rates. If they raise interest rates. So you got to mark Wednesday, July 26th is Fed day. So put it in your calendar, put a big circle on it, put a Sharpie marker on it. Fed day, 2 p.m. Eastern time. Very, very important. Set your alarm, set your reminders. Say, hey, Google, set a reminder for July 26th at 2 p.m. Eastern time. Well, I try to do that. That stopped that. Google. I have to ask my workplace administrator. I am the administrator. Gosh darn it. Anyway, Thursday, July 17th, 2 a.m. Eastern time. That's the European news cycle. Ours is at 8:30. Theirs is at 2 a.m. Eastern time. GfK consumer confidence. There's that the German flag again. Expected the number is supposed to rise from negative 25.4 to negative 24.7. So we look for the euro to be fully active. And now we have the ECB with their rate not to be outdone by the FOMC. The European Central Bank, or ECB, is going to have their interest rate decision. And it's widely expected that they're going to raise rates 25 basis points from 4% to a record 4.25%. So they were at zero or negative interest rates. They moved 425 basis points in just a little short time. So if they raise at 4.25, if they raise more, it could even drive the currency even higher. And so a number of traders are probably going to be, after the FOMC meeting, probably positioning themselves in the euro for the ECB rate decision following, right? The marginal lending rate is supposed to come out too. It's going to be released also 8/15, 4.25%. The rate is supposed to increase to 4.5%. The deposit facility rate is supposed to also rise 25 basis points from 3.5% to 3.75%. Anyway, we can see that the increases in the interest rates in the Eurozone could have a dramatic impact on the euro. The euro is going to be in play. So you might say, oh, gee, what if I only trade the Australian dollar because that's a current. Well, then trade Euro Aussie, okay? Look at EURAUD if that's only one currency that you trade. But it's not Aussie dollar. That's why if you trade Aussie dollar during this time, nothing is probably going to happen for you. So if you're stuck on one currency, check check the flags on your economic calendar. And if your currency is not listed, don't trade. Okay, that's your other option. Cash is the position. You can be in cash and not do anything. You don't have to trade just because everyone else is trading, right? You want to put yourself in the best position to trade when it's most optimal for you. So if you only trade one currency and your currency is not listed on this list, don't try it, okay? But if you're going to be flexible and look at these flags and look at where you can find opportunity, then if you're open to flexibility and opportunity, then by all means, check the flags, position yourself accordingly. But don't try to force your beliefs, your limited beliefs, into the market, because the market will win every single time, guaranteed. Okay? And you work too hard for your money just to throw it away. So let's move on. We have the Euros at 8:30 a.m. We got the 8:30 news cycle back kicking it in the last week of July. This is month end. So it can be a little dicey on month end, especially if people have made money the week before. I mean, we had some tremendous moves in gold and tremendous gains that we made over the last week. And sometimes liquidity dries up the last week of the month. Next month is going to be, we're going right into August, guys. July is over. There's going to be schools going back in session, and people coming back from summer holiday. And we're going to be in back into the fall, and hopefully I hope you guys are staying cool. I go from Vegas, which is 118. I come over to Dallas. It's like 100. I'm not really gaining much ground there, but it was good welcoming my daughter back from Greenland. She was in the Arctic Circle when it was like, in the minus. She was wearing a fur coat in the snow. And also 24 hours of daylight. There's just no nighttime for 6 months, and so she had not seen night for 3 weeks until she came home yesterday. So a big welcome back to my daughter Kira McLeod. McLeod has gone to the Arctic Circle. Went up to the top of a glacier, part of a research fellowship at Dartmouth and JSEP, the country of Greenland, and the Danish government and the U.S. government. And a big thanks to Dartmouth for selecting her and having her. She had all kinds of wonderful experiences in there. Okay, so we are moving right on to the ECB jobless claims. A lot of U.S. data. Now again, I like trading the euro, so I would just stick with the euro for GDP growth rate. It's supposed to actually drop from 2% to 1.7%. And jobless claims supposed to actually rise from 228,000 to 235,000, and actually that's dollar. It'll be dollar negative, I guess, because the Fed will have done their jobs, thinking that basically they want to destroy jobs, because if people don't have jobs, they can't buy stuff, and they can't buy stuff, and then inflation actually drops because people will lower their prices because people won't be able to buy their stuff. So I know it's a very simplistic version and they'll deny it, but that's what they know. They want to see unemployment, they want to see employment at 4.5% employment. And that way that we don't have so many people buying stuff and creating inflation, which is a pretty harsh thing. That's why I invite you to learn how to trade, so you're not part of their numbers. Anyway, moving right along. ECB press conference. The euro is going to be volatile for an hour after the announcement, and the ECB press conference is where they actually start answering questions. They're going to have press people. Hey, why did you raise rates? Hey, are we going to raise rates next month? Hey, is inflation tame? Or so they're going to be asking, and while they're asking those questions, the euro will go up and down, up and down, up and down while they're answering those questions. Okay. Finally, 11 p.m. on Thursday, we're going to have the BOJ quarterly outlook report of Japan. I don't really pay attention to Japanese data, but we have the Bank of Japan interest rate decision. They're widely expected to keep rates unchanged at negative 0.1%. They're one of the few countries that still have negative interest rates. And negative interest rate, they have NIRP, or NIRP, negative interest rate program. and they had ZERP. They had 0, but now they're below 0. Okay. Now, Friday, we have more European data. We have the GDP growth rate quarter on quarter, supposed to drop from 0.2 to 0.1. GDP growth rate year on year, preliminary, supposed to rise from 0.9 to 1%. Again, the euro is in play on Friday at 1:30 a.m. And we also have more euro data. Inflation rate year on year, supposed to fall from 6.4% to 6.2% as the higher interest rates start to curtail demand and creating a lower inflation, right? And then at 8:30, we have our U.S. news cycle kicking off of personal income month on month, rising from 0.4 to 0.5%. That's inflationary, and the Fed does not want to see people's salaries going up because they have more buying power, which could create more inflation. So this is inflationary, and it would mean the Fed will have to raise rates. So you might even see the dollar rise on this. And you might think, oh, hey, this is good news, but it's not particularly good news from a macro point. It's good news for the people who are getting the raises, though. But that's where the good of the people versus the good of the people who think the economy is going a certain way are at odds, right? So USD core PCE price index month on month, okay, and that's supposed to actually drop from 0.3 to 0.2. And the price index year on year is supposed to drop from 4.6 to 4.2%. And then we have some Canada data. Finally, some Canada data. We're going to have GDP actually dropping from 0.4 to 0.1%. As you raise rates, as you get people laid off, as you start lowering prices, your GDP goes down, right? So that has this balancing act. You want to slow the economy, but you don't want to go into a recession, right? So you have to figure out how many jobs can we lose before we actually go into a recession. So they got to do this dance, like dancing around a black hole, right? Like, don't fall in. And month on month GDP is supposed to actually rise from 0 to 0.4%. And then finally at 10 a.m. with 10 a.m. news cycle kicking off of the U.S. Michigan consumer sentiment final. And it's supposed to rise from 64.4 to 72.6. And that would be very good news for the U.S. economy. However, it might be a little negative because if people are too happy, they'll start buying stuff. And if they buy stuff, it creates inflation. Creates inflation, and the Fed keeps raising rates, right? So we were this dance macabre, okay. And then Sunday we have some Chinese data, and usually that comes out on Sunday. So we're looking at the Australian dollar, okay. So lots of economic data, but you can come back here. You can refer anything you've forgotten. You can also watch the replay of this video, and also we're having a if you go to we have our new Baby FX Steps website. It's just $7, guys. And you'll get to see all the replays of Bulls versus Bears in one place. Also, there's the other content, our weekly webinars. That's going to be there as well. And you'll be able to, in fact, let me go ahead and take a look at the link here. And I can bring that up. And Michelle posted that for me. The lovely Michelle has posted that for me. We go to forexbabysteps.com. Yes, it kind of sounds like Forex Baby Pips, but it's Forex Baby Steps. It's just $7. Join the Forex Baby Steps community. Where you get access to our weekly training replays, where you get access to our whole Bulls versus Bears series library, Bulls versus Bears newsletter, exclusive members only pricing on lead traders products, and again, our weekly training replays will be there. Lifetime access is just $7. Come over to forexbabysteps.com and sign up and get your access to the trading community for absolutely $7 lifetime. It's quite worth it. Again, go to forexbabysteps.com and go to our community. Take care, and we'll talk to you there. But let's go ahead and go right into the charts. So we're going to start with the Dixie, the U.S. dollar index. The U.S. dollar index is a basket of currencies versus the U.S. dollar, and we can look at the technical picture. I like looking at the big view. I'm looking at the big 50,000-foot view of what is going on with the U.S. dollar. Something you can't really do on a phone or a tablet. It's a small tablet. you want to look at, you want to have your big screen, and you want to be able to stretch out and take a look at what's going on with the US dollar. And you can see that, after hitting this high of 165.21 back in 1984, when I was in high school, we've been going down ever since, right? Long downtrend, right? But we do have some rallies against the uptrend. We have some support. We got down to about the 87 level back in 2009, the financial crisis. And we actually got down to like 71, right? And then we have some classical resistance right there, 120 area. And we recently peaked out with the interest rates at the near the 112 area. I think we were like 113 or so, right? But we also had a range that we stuck in there for a really long time. For almost, for almost 6 years, 8 years, we were stuck between 104 and the lows that we found down here in the 89 area. So you can see we really haven't gone too much. This is a rally against a downtrend, and now we're like changing direction. And a lot of people thought, hey, if they keep hiking rates, what's going to happen? So this is a monthly chart. This is 50,000 foot view. So this is like the satellite reconnaissance. What gives us the United States an edge in the military is because we have those satellites over the earth that gives us this. Anytime we had a war, the army that had the high control of the high ground usually had the advantage, whether it's the top of a hill, the top of a mountain, some fortress or a fort or a base. And now the high ground extends into outer space, the air, having air superiority, weather balloon, tracking balloons, the high territory. So it's no different than the warfare of bulls versus bears here, where we actually see the green army, which is the bulls, versus the red army, which is red. And we can see this whole battle unfold right before our eyes. We can see that the bulls were in full control as Jerome Powell at the FOMC raised rates to fight inflation. And then he found some resistance in this 114 area, which is really some resistance that we found, back in the year 2002. This is an area of support, resistance, actually a supply zone we could put there. Price rallied to that, and now we have some rejection. A lot of people are expecting, including myself, or maybe a retest of that old high. But what's happened is, as inflation has mitigated itself, falling from like highs of 7 to 8%, now we're like down at 4%. Well, now the reason for keeping the dollar up starts to drop, and we've been in a sideways consolidation for a bit, and now we're breaking below this support area, down below this 101 area. And we wicked below and got as low as the 99, and now price comes right back into this sideways consolidation, right? So we look for the sideways consolidation, and we could bounce off this area and maybe move a little higher, moving back to the top of the channel. We're in this range. We can lower the top of this range. 105 is the top of the range. We could see a retest after these bottoms have been hammered. Unable to break out of this box, our next move was probably to the upside. Seasonally, this is what happens to the U.S. dollar. Every for the past number of years, the dollar usually gets strong going into the fall, and then usually drops as we get into October and November. Okay, so let's go ahead and drop down from our monthly view, or 50,000 foot view. We're going to move down to a weekly view, and you can see a weekly bullish Harami candlestick pattern. The Harami means skin on the belly, or pregnant pattern. We have a mommy candle, the large red candle with a small green body in the front, and that would be our mommy candle pattern, a pregnant pattern, where we can actually see price actually move higher, right? And so they will this is a bullish reversal, a 2-candle bullish reversal pattern, and we have it on the weekly. So that kind of tells you that we are going to be going up for quite a bit from this area, unable to break below and close below this support area. We couldn't. The bears ran out of power, and now the bulls have taken control. So let's go ahead and move ahead to a daily chart. and we can see prices coming back, a return RTTSE, a return to the scene of the crime, and not only a return to the scene of the crime, right, right to the breakout area, but now we broke above this area too, and so that could mean a move higher, even up to the 103 area. Now, what does this mean? Because you say, well, Greg, we don't trade the dollar index, right? And so bulls versus bears, US dollar. I am bullish US dollar. Go USA, 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 USA. Yeah, we got like inverted head and shoulder pattern and breakout. And so what does that mean for the other currencies? Well, that means their goose is probably cooked. We should probably see a drop in EUR USD, right? We might move sideways going into the ECB rate announcement. And it's going to be kind of interesting because a lot of people are expecting, well, if they raise rates, well, then if they raise rates, then the euro should go higher. And that might not be the case. That's probably going to fake a lot of people out. And we'll even check sentiment for those people who attended the sentiment webinar that we had. It was a fantastic. We had attended standing room only on Zoom. Can you believe that? But don't believe that. It's virtual. But let's go ahead and take a look at the EUR USD. This is the euro. The euro is one of the most widely traded instruments in the universe. About between the US dollar and the euro, we're going to see 85% of the trading volume on this, right? And so we can see again the big wide picture of the euro, and we can see that that even though we've been trending up since the beginning. I mean, the euro actually was the European currency unit was actually, Brendan Woods, they did a calculation of what it would look like back in the 50s. But look how we've been rising actually, right? And we've also been falling too, right? That's the thing about currencies. Anything it goes up and down, right? We're just one big giant range over time, right? So we're just in this kind of this move here, right? So we have a long-term uptrend that we can see that on the monthly chart, 50,000 foot view, higher highs and higher lows that we're seeing on the monthly chart. We go down to a weekly chart, and we can see that we are probably reaching the top of a range. We have a bearish Harami candlestick pattern on the weekly. The mirror image, remember I told you that the euro is the anti-dollar. So this is the anti-dollar move. While the other one was a reversal going up, this is a reversal going down. And this is a 3 drives pattern. We have 1 drive, 2 drive, 3 drives, and we can see a huge drop in the euro over the next several days going into August as we get into our fall season. So bulls versus bears, I'm actually, I'm maybe short-term bullish, like a day, but then I am medium-term bearish, maybe up until October, November, right? Which will probably take us down into, maybe take us down into the 105.36 area. So this could be a very strong down move that could occur. Which is really it's a correction in a downtrend or a correction in an uptrend, right? We have this kind of a flag pattern. We can come back down into this area here and actually find some support, or we break down and retest these old lows here. And from there, I see a massive move to the upside as we tame the inflation bear and the euro becomes the hero. But don't think it's going to zero, but don't think it's going to go too much higher than where it is right now. We have a bearish, it is an evening star formation, but it's kind of a complex evening star. You go to a 4-hour chart, you can see that we are making lower highs and lower lows. And after reaching a high around 113, close to the 113 area, we're already down at the 111.14 area. Bulls versus bears. Bearish, okay. And so the great thing about knowing the direction of the dollar index, we know that the other currencies are also going to be bearish as well. Currency pairs like GBP, USD. which there'll be medium term down as well. Why? Because it's GBP slash USD. USD and DXY mean the same thing, okay? And we can go, again, start for the 50,000 foot view, start with the, 50,000 foot view, and who's a master at using that is Jamie. Jamie Cut the Rope is he's my live trader that helps our traders pass the challenges. I know it's kind of like cheating. It's like the smartest guy in the room and copying his answers. We've got that going on in mentorship. And so if you're interested in mentorship, you're interested in copying off of someone who really knows what he's doing. I trained him personally, and he does a fantastic job. And we have people passing their challenges left and right, because not only do they know my system, but they have the confidence to pull the trigger because they're able to watch myself trade, to watch Jamie trade, and we're creating a culture of winning traders here at Elite Traders University. That's why it's called elite. Elite, the word very much in itself, elite means super, just outstanding, above average, like our elite forces. We're elite traders. I'm not talking about, win 4 out of 10 trades, 40% win rate with no, 90% win rate, pal, right? We are in the bar market 4 or 5 bars ahead of the crowd. It's like cheating. It's like fish in the barrel. It's like stealing candy from a baby, right? And that's why it's not cheap. I did ChatGPT. Tell me about Elite Traders University. Well, they have a really good trading program, but it's expensive. It's like, if you taught people how to make 90% win rate, wouldn't you be expensive too? Anyway, if you're not in it, it's more expensive not to be in it, because you're gonna pay me anyway. When you lose these challenges, and when you lose, not to say anything bad over you guys, but come on now, we know the routine. Take out your credit card, put it in there, hope you pass. Oh, you lose. Take out your credit card, put it in, and you lose. And guess what? We're taking the other side of your trades, so we're making money. So why don't you just come on our side and make the money and pass your challenge? It's simple. Stop fighting it. You're not going to find anything better than Elite Trade. That's where we're elite. Hello. So anyway, shameless plug. But again, I'm actually going through the process of how we even go through these trades. If you pay attention, I'm actually giving you the keys on how to trade this thing, right? Monthly chart, again, higher highs and higher lows. We have an uptrend, beautiful uptrend. But you say, but Greg, there's a downtrend. It's like, yes, there is a downtrend, right? But it's a downtrend in the context of an uptrend, right? And we have those. So we're approaching some areas where we're going to have some type of a pullback, right? In fact, we can stick a Fibonacci on this mug, going from the wick, play our Drake song from the bottom to the top, and now we're here, right? And we can see maybe a 38% retracement. We can get down to the 120 area. That's an 800 pip move to the downside once we break this trend line, right? Why? The US dollar is strong, and yeah, we have an uptrend, but we're going to probably have some profit taking right now before we move higher. This is a monthly chart, 50,000 foot view. Look at a weekly chart. Oops, there's our Harami. Or if we have a bar chart, let's go old school, baby. Bar chart, man. Inside day, baby. Got an inside day, right? That is bearish, right? So we got this bearish move, but pull back on the weekly, go down to a daily chart, and you can see moving. It might get a little bit of a bounce, might get a little pullback upside move, but when this thing spikes up and a retracement move, I'd smack this to the south side. That's what I'm going to do. Why? Bulls versus bears. I am very, very short-term bullish, but medium to long-term bearish. And we'll probably get a move down to the 120 area before rebounding in the fall. About late November, we'll watch a rise, and we could probably see 130, 135 on the pound dollar. But for the most part, we're going to see a drop back down to trend line support. And so that's what I'm looking at for the pound dollar. Again, once you understand how the dollar is moving, you know the keys to all these other currencies, right? So let's go ahead and take a look at Australian dollar, AUD USD. Aussie dollar is a proxy for China because China is one of the largest trading partners of Australia. Australia supplies raw materials like iron ore and copper and strategic minerals, and for manufacturing pipes and wires and things used that for exports that China uses, right? Now, the Chinese economy, you haven't look at the news reports, is moving, the GDP is in single digits. And the economic miracle of China, which was moving at 12 and 13% per year after COVID, is only up 5%, which is pathetic. For US, 5% GDP, like, woo! But 5% GDP for China is like nada. And since Australia, New Zealand, their economies are so tied to China that when China's economy catches a cold, it's like the flu for Australia and New Zealand, right? So I'm not saying that even though they might be, if they have a rate announcement, they hike rates or something like that, they're probably not, it's not going to affect their currency because look, we've got a downtrend, lower highs and lower lows on this monthly chart. And look at the long wicks that we're getting at, even when we have bullish moves, they're met by a lot of selling, right? Met with a lot of selling. So let's move down to a weekly chart. And we can see that Harami again, right? And maybe some type of a double top formation. And so we're looking bulls versus bears. We're looking for this as a bearish move. And we're looking maybe for short-term bullish, maybe like a day, but then we're going to see, could see a move. I would be a seller of the Australian dollar on any rally. And this is a seasonal move because it seems like we might have broken the back of inflation in the U.S. The Fed doesn't want to celebrate too early, right? They start celebrating, the market goes up, 10, 15%. It's going to stoke inflation again. It's going to reignite inflation. So they kind of paying it low. We're going to raise rates. We're going to keep hiking rates. They want to keep things down because they know that things are about to get really, really nice and hot going into the fall. So Australian dollar, look for a rise and a pop and drop. Bulls versus bears, I am bearish Australian dollar. Okay, let's look at the Kiwi. New Zealand is known as the Kiwi dollar because the bird, national bird, not because of the fruit. And they are called the breadbasket of Asia because they supply milk and meat to hungry Asian economies. And there's more sheep than people there. And so with that said, they play an important part in the Asia Pacific Rim. And with that, we can see that all this time we've kind of moved sideways during this time period because, the growth engine of China is not that hungry. They don't want so much meat and so much milk. Why? Because they have 21% unemployment among their youth and their economy is only humming around at 5%. And so that means less demand for New Zealand products. And so we see that the New Zealand dollar has not made any significant new highs in a while. And in fact, bulls versus bears, we have a couple things going on. We have maybe a downtrend of sorts, lower swing highs and lower swing lows, right? And that kind of increase. But we also had a rally, right, from these lows down here where we got down as low as 39.50 back in 2003. But as we're closing in on these lows and highs, we're going to probably see some type of a breakout, maybe a retest of the 56 area. And probably once we test this line is formed by 2 points. This point, this group of points here, and this point. And if this point gets tested, then we might see a bigger move to the upside as the U.S. dollar starts to weaken in the later fall, right? And we can see probably a massive move in the New Zealand dollar much later. Don't think, hey, Greg, you said it was going to go up to 89. Not now. But, so look around like November. We'll start getting some bounce back around here. We break out of this triangle, and we're probably going to see 88, 68 or so. But right now, I think we'll see 56 before we'll see 86 or 88, right? So bulls versus bears, I am short-term bullish, short-term, like probably a day bullish, But then I'm looking for maybe like 30 days of downtrend. And this is perfect. If you guys are trying to pass a challenge, you can get longer these currencies or short these currencies. And kind of if you're in a certain prop trader that allows you to hold over the weekend, you can put a small position, let this run. And then if you have unlimited time, you're all going to pass, right? I gave that's a freebie. Didn't cost you a dime. Why? Because it's worth it. Share this video with other people. Mark the time on the video and share this with your friends. Okay, do me a favor. Okay, I'm giving you something. Give me something. I want to enlarge my audience. I want people to learn and prosper and do as well as my students and I have done. Want to spread the word, spread the wealth. Let's get the word out there. Do me a favor. Retweet this or resend this out or share it, however, give it to your group, post it, say, hey, this guy, he seems like he knows what he's talking about, right? And that's good. It's good karma, guys. Okay, karma, sowing and reaping, wherever you want to say it. When you do good, it comes back to you. If you share this with someone, I know you're gonna have some winning trades. Okay, hey, don't quote me on that, but it just happens. Good things happen to good people that do good things, right? And people that do bad things, they may get away get away with it for a bit, but God will not be mocked, but man will reap what he sows, right? So, isn't it cool that he's merciful? He doesn't send a lightning bolt on us right away, but gives us, the ability to find forgiveness. Anyway, I ramble on again. Daily chart, you can see it's rolling over. Hey, roll. Will it fetch? I don't know, but will it roll over? Sure. Okay. New Zealand dollar, we just covered that. So now I was going to cover, and that's a bonus because I didn't even have that on the list. Let's go and take a look at the USD JPY. That's the dollar yen. That's always the sticky one. People love trading it, but I find it can be kind of wonky. It does what it wants to do, right? I'm going to remove all drawn objects, and we can start from scratch, looking at this 50,000-foot overview. And you can see that, after reaching a high of 150, 153, and we have the Bank of Japan rate announcement too, widely expected to keep rates unchanged. And this looks actually pretty bearish. We have a high and a lower high. We need a lower low, a break of 127.98, and we could get that, right? Because remember, we had this area here that we broke out. We did not come back to retest it. We really had a long channel consolidation, and we just broke out. And then maybe we get some type of an ABC pattern down. We have. Basically, we had higher highs, higher lows, and then they accelerated with even a steeper trend line with more buyers stepping in, causing prices to accelerate. And in fact, these are called speed lines. When we can see that as prices actually, when the angle changes, it's actually creating the speed of a rate of change is actually going up, right? For those math and physics people. So we can see that we come across some old resistance. You see the market has the memory, and the old high from 1998, we went right into. This was a financial crisis. So we've had some financial crises. If you've been around 1998, we did have the long-term capital meltdown, a giant hedge fund that was so over leveraged that it just blew up the Southeastern Asian economies. And that was my friend David, who went to Japan. He had $10,000 doing a study abroad in Japan. He happened to be in Japan at the time of the crash, and his $10,000 that he had in his pocket, because he decided to keep it in U.S. dollars. He said, hey, everyone loves U.S. dollars. Well, then as this giant move happened, his $10,000 went down to like $4,000, right? So he lost $6,000 of value just by standing around looking at the currency values. I mean, nobody was really studying forex back then. You understand, all of a sudden you can't buy stuff anymore. It's like, hey, what he said $10,000 would last back then would last him for maybe 3 months there. He wound up having to come back home because all of his money had disappeared just because of that. So and to this day, when he tries to trade the first thing he does is try to trade JPY. I go, bro, you lost that money like friggin' 23 years ago. Give it up, man. It's over. But that's, I mean, he was there. That wick was him, right? He was there. You know, it's like you pick it's like me I moved to Houston in 2005. And what happened? Katrina showed up, right? It's like I was there 1 month and unloading my stuff. Hey, Ken Folk, you were evacuated. It's like, what do you mean evacuate? I just got here. There's a hurricane coming. Katrina's coming. I go, what's that? A hurricane. I'm from California. I don't even know what a hurricane is. I'm evacuating. Okay. So timing, guys, is everything, right? So you don't want to, look at this and say, oh my goodness, this is an uptrend, I'm going to buy it. And then boom, this thing breaks and breaks and breaks down, right? So I'm looking bulls versus bears. I am bearish dollar yen. Somewhat. We've got, I think dollar yen is a really odd one. We've got this bullish harami here. And so sometimes it doesn't go with the other currency pairs because we have two risk-off currencies. We have USD, which is a risk-off currency. That means when things are bad, dollar rallies. When things are bad, the yen rallies. When things are good, dollar and yen usually go down by themselves. But when they're paired together, who knows what they do, right? I usually stay away. But in this case, we might actually see a retest of the high in dollar yen. Okay. And I know dollar yen is just a different animal. I'd rather look at dollar Swiss if you look at dollar pair USD CHF or USD CAD. Dollar Swiss is interesting too. We have a harami long wick at some support here. This was the collapse of the Swiss National Bank when they unpegged the Swiss franc to the euro. The euro and the Swiss franc were pegged, so they never they moved in a range and they stayed sideways for a long time. And finally, they decided to break the peg. So this thing dropped this long wick. We went from 102.81 all the way down to 82.68. So it was like a 2,500 pip move in one day. It was huge. It screwed a lot of companies and people too. So we didn't get that low. We did get to the low of 2021. We broke through that. And so, this is an overextension of a bigger range. And usually when we stretch out, this will probably turn into a wick. Price comes back in. And so it becomes like we call it bear trap, right? The bears are high-fiving each other. They're high-pawing each other. They're counting how many things with honey they're going to buy, how many caves they're going to get, how many berries. They're all excited about, and then boom, we get a reversal, and then thing shoots back up. So I'm looking bulls versus bears. I'm actually short-term bearish, but I am medium to long-term bullish, and I'm looking for a rally for at least maybe 30 or so days back to the 92.02 area. Okay. So that might be pretty interesting. Now, it's going to be shaky up in there. It's going to be bouncing around here, but might be some type of a generational low before we see some type of a rally higher toward this 38% retracement, 92.02. And when we get into that area or so, maybe a little bit higher, then we probably see a blowout to the south side going into the fall, right? So and the thing about it, you're like, well, Greg, I'm gonna trade the trend. It's lower highs and lower swing lows. You sell that and see what happens, and tell me about it. Send me an email at greg@elitetradersu.com if you sell this. Let me know and how you feel and the size of your account afterwards, right? So this is so bulls versus bears. I am actually I'm short-term bullish. No, short-term bearish, but medium to long-term bullish. But in 30 days or so, going into late October, November, I would love to short this, right? Love to short this in here and ride this down and pass a whole bunch of challenges that way. Okay. And I'm a scalper too, but I'd like to, you know, maybe not turn on the computer one day and just let it coast on down the lazy river kind of trade here, right? In fact, yeah, we can see maybe a little bit of a pullback down, maybe down to like 86, the figure 8600, and then go for that long. That might be pretty fun. That's what I'm going to do anyway. You can do what you want to do. Remember, this is for educational purposes only. Okay, USD CAD, going to continue. And we're on a roll here. Boom, boom. Look at this. I'm going to remove the drawings there. And we probably break this up. I know it's kind of a long broadcast, but look at this, baby. Look at that. Got this. We have the forming of a morning star, a harami, a doji harami, baby, mother giving birth to a doji. This is a very bullish pattern. And we can see price break above the doji and head back up. Also, we have a kind of a bull flag, a pennant flag pattern where we have this flag pull, and then we have this pull back, and we look for a price to break out of this zone on the and let's move up for a little bit, maybe move back up to this old high before we see a move back down through it, and going into the fall. So looking for maybe a little bit of a breakout to the north, and then after that, again, longer term view. So I'm short term bearish, really. So bearish, a little move down, then a big move up, and then a bigger move down. All right. I know it's kind of confusing, but we'll watch it. This is what a little move down, little move, just a little bit, right? Just to set you up, like this the volleyball players, they set up the ball, set it up, and then wham, right? And how about those women's soccer teams? Let's go. All right. S&P 500, let's get to the indices. Or let's go, hey, you want to go to the commodities? We can go to gold. I have to do gold for my gold bug guys in the winner's circle. Winner's circle is our premium time when we actually trade. You trade with me, Dr. Greg. We do it at 5 a.m. Pacific time, which is 8 a.m. Eastern time. 3 days with me, plus we're going to be trading in Cabo. Also, we're going to learn entity structuring, how to create a commodity pool or hedge fund, and also how to create a financial fortress for your family, pass on that legacy, and trader mindset, including meditation and the hypnosis in order to help you become a better forex trader, to set that mindset, that millionaire dollar mindset, and that so you can pass multiple challenges using copy programs and a number of things we use to scale the winner's circle. You want to contact Michelle at elitetradersu.com if you want to know more about that. Okay, our month we're looking at, and we can see that we had a double top and a correction, and now we rallied and we pulled back on our monthly chart. And then actually we have the start of a new uptrend on gold. So don't let those shakeouts fool you. Gold is going to go north. However, we might get a little bit of move south first, because it is the US dollars on the other side of this thing. So remember, we hit a high of we were back in the 20 we hit some highs in back on gold, 2060 or so. 2083 was a high. We pulled back down to a low, down to the 1600s. Can you believe we're at 1600 on gold? And now we're back at that 1961. We might get a little bit of a pullback. We might continue to pull back maybe to the bottom here at 1800. And that might be setting up us for a break above to 2000 area. We have this high, this bull flag on the monthly chart that's just screaming to go farther, higher, farther. And so bulls versus bears, we're looking at we're bullish, short-term bearish, very short-term bearish, but medium-term bullish on gold. Okay, and moving right along, let's look at the other commodities. Should also rally as commodities are priced in gold. Sorry, not gold. Whoa, it's Freudian slip there. Commodities are priced in US dollars. Okay, They're not priced in gold. Interesting if they were. Let's go to the monthly chart on oil, and boy, look at that giant candle after hitting the lows of 64.26 back in May. We're at 76.68 on WTI West Texas Intermediate. West Texas Intermediate, just a couple of hundred miles up from me, is Cushing. That's where the strategic oil reserve is located, and so you can see the gasoline is pretty cheap over here. Looking at $3.31 a gallon just filled up. And you can see nice little bull flag there where we can see a nice breakout to the north side on WTI. And let's go down to our weekly chart, walking it down. And you can see that we are gaining some traction, looking for a break. US dollar has been rallying too, and seems like oil can stand it to hold its gains as well. And we can see, over time, we might see oil come back and retest the 121.75 area. Okay, and let me go ahead and close this. Okay. All right. So let's go ahead. WTI. So we looked at gold. Let's look at, and we look at silver. XAG USD, and we can see that silver has a little bit of a bearish, doesn't look as bullish there on the weekly, but on the monthly, we do have higher highs and higher lows in the monthly chart, as you can clearly see. And gold is like silver is poor man's gold, but still $24 an ounce. And $50 an ounce. I actually bought a friend some silver coins for his birthday at $50 a share or $50 a coin. And guess what? I am the high tick on silver. There was talk of it, silver going to $100. It's like, no. Well, but here we go. 24. Looks like we're finding some support in that 24.61 area, higher highs and higher lows. But still, we got a lot of congestion that we have to break through at 29.48 or so, and we might not get past that area. But on the weekly chart, we can see maybe topping out some resistance, and we may come back down there. So bulls versus bears, I'm actually more bearish silver than gold. And but we can walk it down to a 4-hour chart, and we can see that looks like it wants to roll over and drop, like it's tired. It got up to this $25 area. May come back and test the trend line at 22.48. Okay. Finally, let's get to the indices. Let's get to the SPX 500. It's been on a tear. It keeps moving higher, heavily weighted by the tech sector, AI, and we can see I have drawn these inverted head and shoulders, and we can see that we have broken the trend line, and we continue to move toward the high of about 48.12 on the S&P 500. It's really moving up in the space of seasonalities. The sell in May and go away did not apply here. If you sold in May and went away, you totally missed on a huge run in the S&P 500. This is a 50,000-foot view, inverted head and shoulders. We broke a rising trend line, and we're moving up toward resistance at 48.12. Go down to a weekly chart. We can see that we're still making some new highs, hitting new records in the S&P 500. Bulls versus bears. I am constructively bullish. The trend is still your friend. It's still moving higher. I don't think we might not move as fast. We are approaching some old highs here at 46.44. We have a high back there that we had back in March 29th, 2022. And we're reaching up to 46.32.84. But we continue to make new highs, and we might continue to climb this wall of worry. Remember, they told us, oh, high inflation and the recession, the stock market's going to go down. And it basically froze most of retail traders because they're so afraid, as they just watched it make new highs every single day, right? So bulls versus bears, I am still bullish S&P 500. It's going against seasonalities. It's going against traditional moves in the market. If you sell in May and go away, you're just going to miss out. price the S&P 500 continues to rise. Let's go to the NASDAQ 100. The NAS 100, again, a very tech-heavy sector. And we can see that it's now we did get a big pullback though, a couple of 3-day pullback. The pullback in the context of an overall uptrend is still an uptrend, and we have moved so far from where I said, "Hey, look at the arrows I drew. I drew arrows, guys. Look, 1368.3, and we're at 16,000, 15,970, just a hair short of 16,000, guys." And I forecasted this, drew arrows, and I've done this every week, telling you about the rally in the NASDAQ 100. And, you know, I didn't get so much as a Christmas card. You know why? Because it's not Christmas, Greg. Hey, you know what? Technicalities, right? How about thank you card? Anyway, monthly chart. I have so many arrows. I don't know what to do with it. I'm an archer. I have so many arrows, right? Monthly chart, higher highs, higher lows. This is the old high. This is the target. The way you trade, you look left, you look at right to pull the trigger, look left to find where it's going to hit. And so I look left, and this is the target, and this is where we're going. I'm not talking about going to Walmart. I'm talking about going to Target, baby. Hitting that target, 16,725.70. You heard it first on air. Bulls versus Bears. Hey, that's the way I see it, and I'm going to call it. And that's all to it, right? Just my 2 pips, purely for educational purposes only. Hope you found great value in watching this. Hopefully that you you'll share this with a friend. Come over to our website, elitetradersuniversity.com, www.elitetradersuniversity.com for your needs, your educational needs. You can take your trading to new heights, all the right tools and training to start trading professionally in 90 days. 90 days, guys. You want to trade with an edge. 90% of traders lose because they don't even have an edge. In fact, they don't even have a plan. And you've heard that if you fail to plan, you plan to fail. So you want to have a plan. You want to have an edge. You want to have a system, and you want to have something that you rely on. Check out my free masterclass. Go ahead and click the link up there. The pop-up will take you to a free masterclass. You can register for it. And don't worry, we won't spam you or sell your information. But we've all, just go ahead and watch our 4 pillars for 6 figures, on-demand trading, profits, and financial freedom in 8 weeks or less. Even if you've never traded before, claim your spot, click the button, fill in your name and your email address and your phone number, and get immediate access to this fantastic training. Or you can even, if you prefer an ebook, you can go to ebook. But I also want to let you take a look at this. I'm really excited about our new community, Forex Baby Steps community. Get it now for just $7 lifetime access. You get access to the weekly Wall Street trading replays when I teach on different topics. That's the only place you're gonna get the replays. They're gonna be in this member site. Bulls versus Bears. You're gonna have access to all the Bulls versus Bears, the Bulls versus Bears newsletter, and exclusive member only pricing on Elite Traders products, and all that for just $7. One-time payment. We got 8 seats left. Go ahead and get that. Also, check out our Forex Power course as well. If you want training immediately using our proprietary system, come over to Elite Traders University, right? All right. With that said, I want to thank you so much for joining me. I really enjoyed spending this hour and time with you. I look forward to teaching you. Happy trading, and God bless you. Peace and pips. Cheers.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!